The Eurozone could escape a recession, but the outlook for the UK is not so positive. This is according to the latest economic data. Britain's economy is contracting at its sharpest rate in 2 years, raising recession fears. In contrast, the Eurozone returned to growth in January for the first time since June. Well, flash PMI, which estimates manufacturing activity, rose to 50.2 in the Eurozone, beating expectations, a figure higher than 50, of course, indicating growth. But the figures for the UK weaker than expected, flash PMI sliding to 47.8 from 49 in December. Industrial disputes, higher interest rates, weaker consumer demand, all contributing to the slowdown. Well, let's get more on this with Christian Schulz, Deputy Chief European Economist at Citi. Good to see you. Welcome back to the show. Let's just start with the Eurozone, if we might. Does this data mean the Eurozone might escape recession?
It makes it increasingly likely, yes. The PMIs are one of the better indicators of where growth is right now, and at these levels the economy normally does not shrink. Of course, there's always a bit of uncertainty around these indicators, and of course, if you look at the data from the various countries, for instance, Italy had a pretty bad quarter in Q4. It looks like industrial production down. So there's always a risk that we get a very slight decline, but certainly not a deep recession and most likely stagnation, I'd say.
The UK has suffered this sharp January contraction in activity in contrast to the Eurozone's apparent revival in business activity in the same period. What's going on here then?
Well, both the Eurozone and the UK are benefiting, of course, from the fact that the terms of trade shock, this massive energy crisis triggered by the war in Ukraine, is unwinding. The euro area is also benefiting from the fact that the Chinese economy is reopening. Europe exports a lot more to China than the UK or indeed the US. But the UK has some idiosyncratic factors it's dealing with at the moment. We have a much bigger tightening of financial conditions, so a much bigger increase in interest rates and borrowing costs of the economy than in the euro area so far. The Bank of England's been more aggressive. We had that almost financial crisis in September around the mini budget, which has led to a turnaround in fiscal policy in the UK, which hasn't happened in the euro area so far. But maybe the UK is also a bit of a leading indicator because it came out of the pandemic a bit earlier and vigorously than the euro area. It's now suffering sort of, if you like, the hangover of that party, and maybe that's only to come in the euro area. So we're a bit uncertain as to what degree the UK might just be a leading indicator for the euro area. But right now it looks bad for the UK indeed.
Christian, just give us a bit of an international perspective on this. I mean, how does Europe and the UK compare to the rest of the world?
Well, if you just look at the PMIs, Europe actually looks pretty good. I think only Japan at the moment is in expansion territory. Economies like China, the US, the UK, of course, all in contraction territory. But the reality is, of course, again, that the PMIs are one good indicator, but you have to look at a broader set of indicators. The US economy has had a more complete recovery from the pandemic. Consumption still looks strong, labor market looks strong, wage growth is strong. So there's still some power in it, some fuel in the tank of the US recovery, I think. China is only now sort of coming out of the pandemic, so we're quite optimistic that the Chinese economy will recover more strongly later this year, even though right now it may not look quite as strong. And Japan will benefit from the Chinese recovery as well. So I think it's a very fluid picture. The snapshot looks good for Europe, but it's going to have to hang on to the tigers that pull the global economy in order to keep that positive momentum, that relief that we feel at the moment going.
Christian, good to see you. Thanks so much for coming on the programme, for your expertise. Christian Schulz, there, Deputy Chief European Economist at Citi.